Hello, my dear student. How are you all? Everyone fine? I am also doing great. And I hope everyone is doing great with their preparation for the upcoming exam that is May 2025 attempt. As you all know that I have already released case study MCQ based question for CA Final Financial Reporting paper. With that, I have also released chapter wise MCQs for your preparation. If you have not yet downloaded that case study based question or chapter wise MCQ based question, you can download it from my Telegram channel. The link of that Telegram channel is given in the description of this video. In that Telegram channel, you will find everything related to May 2025 attempt. Now, what is the objective of today's video? Objective is that now from today onward, I will record each case study one by one. It will help you for your preparation. What you can do, what is my suggestion to all of you, that whenever you take any break, whether it is lunch break or dinner break or whatever break as you have planned, at that point of time you can listen one by one each case study, which will help you and which will give you confidence about the MCQ based question. And you all know that MCQs are going to come for 30 marks. Out of 30 marks, if you can easily score 20 or more than 20 marks, can I say it will help you to score more than 60 marks in CA Final Financial Reporting paper. So these MCQs are very important from examination point of view, and you should be very much confident before going to exam hall. Can we start a discussion with the case study 1 today? But before I start case study 1, don't forget to subscribe this channel and like the video, as your one like will bring a smile on my face. Can we start a discussion? Yes, sir. So we'll start with the first case study 1, which is nothing but from RTP May 2024 attempt. Yes, sir. Start discussion. Now, what is given? FA Limited is a company which manufactures aircraft part and engine and sell them to a large multinational companies like Boeing and Airbus Industries. Following are the details of some of the transactions entered into by the company. I think this question is already given in ICAI study material with, I will say, already it is a part of our ICAI resource question, and I hope you have done this question before that also. On 1st April 2002, the company began the construction of a new production line in its aircraft part manufacture set. Means they are doing construction of a new production line. It is a question of Ind AS 16 property, plant and equipment. Costs relating to the production are as follow. Details. Cost of basic material lease price 12.5 lakh less 20% trade discount. Of course, it will be capitalized and it is already reduced by 20% trade discount. Okay, sir. Recoverable goods and service tax incurred but not included in the purchase cost. So recoverable goods and service tax means it is already refundable, so it will not be capitalized. It will not be capitalized. Employment cost of construction staff for 3 months till 30th June 2002. So employment costs which are directly attributable for construction activity will be capitalized, but it is given for 3 months. We need to find out the construction period is for how many months. Of course, it will be capitalized. Other overhead directly related to construction, of course, it will be capitalized. Payment to external advisor relating to construction, it will be also capitalized because this is also directly attributable cost. Expected dismantling and restoration cost, if there is a legal obligation to dismantle, so this will be also capitalized, but at present value. So you need to find out this discounting factor given in the question. The production line took 2 months to make ready for use and was brought into use on 31st May 2002. Means the property, plant and equipment is ready for use on which date? On 31st May. So from this date depreciation will commence. From this date depreciation will come and we'll need to cease capitalization on this date. Correct? Now it is given 2 months. So can you see it will be 1.20 into 2 divided by 3. So how much will capitalize? Will capitalize only 0.80. 0.40 will be charged to profit and loss account as an expense immediately. The other overhead were incurred during 2 month period only. So the other overhead whatever has given, that is for 2 months. So it will be entirely capitalized for the period ended 31st May 2002. They include an abnormal cost of 0.3 lakh caused by major electrical fault. So out of 0.90, how much is abnormal loss? Abnormal loss is 0.30. So that will not be capitalized. That will be charged to profit and loss account as an expense. And the balance is how much? 0.60. That will be capitalized. The production line is expected to have an useful economic life of 8 years. So what is the useful economic life? 8 years. So 8 years will be the 8 year will be taken for depreciation. After 8 years, FA Limited is legally required to dismantle the plant in a specified manner and restore its location to an acceptable standard. So they have given legal requirement. So there is a legal obligation to dismantle. Therefore, dismantling cost will be capitalized. We need to find out the present value of dismantling cost, and we need to create a provision for that as per Ind AS 37 requirement. The amount of 2 lakh included in the cost estimate is the amount that is expected to be incurred at the end of useful life of the production line. So that is already given 2 lakh. Yes, sir. The appropriate discount rate is 5%. Discount rate is also given 5%. The present value of ₹1 payable in 8 years at a discount rate is 5. Discount rate of 5% is approximately 0.68. So it will be 2 into 0.68. How much it is coming? Correct. So 2 into 0.68, it is coming 1.36. So 1.36 will be capitalized. 1.36 will be capitalized. Okay, sir. Then what is given 4 years after being brought into use, the production line will require a measure overall to ensure that it generates economic benefit for the second half of its useful life. So after 4 years, we need to do some major inspection cost, major overall cost, and that will give economic benefit for the next 4 years. Correct. The estimated cost of overall at current price is 3 lakh. Means if you have done the same overall expenditure today as on the date means when the asset is ready for use, means on 31st May 2002, then the current price of that future similar expenditure would have been how much? 3 lakh. So can I say this 3 lakh is nothing but the cost which is included in the total cost. So the useful economic life of this major inspection cost or major of overall expenses will be how much for the, it will be the first 4 years. So first 4 years this will be amortized, means the total cost, out of total cost, the 3 lakh will have 4 year useful life and the balance will have 8 year useful life. So depreciation will be calculated accordingly. No impairment of plant had occurred by 31st March 2003. So there is no impairment loss. So we are not supposed to calculate any impairment loss. Point number 2. So the first part of this case study is based on Ind AS 16. Ind AS 16. Understood? Come to second part. During the year ended 31st March 2003, FA Limited provide consultancy services to a customer regarding the installation of new production system related to aircraft part. So they are providing some consultancy services. The system has caused the customer considerable problem, so the customer has taken a legal action against the company for the loss of profit that has arisen as a result of problem with the system. The customer has claimed damages to the tune of 1.6 lakh and the customer has demanded how much damages? 1.6 lakh. So of course it might be related with the provision, because you need to create a provision for expected expenditure. The legal department of FA Limited considered that there is a 25% chance the claim can be successfully defended. So there is a 25% chance of winning. So it means 75% chance that they may lose the case. So of course, there is a present obligation arising from past event. Outflow is also probable and amount can be estimated. Amount is given in the question only. So of course, we need to create a provision for that. Provision for 1.6 lakh. The legal department further stated that they are reasonably confident the company is covered by insurance against this type of loss. The accountant feel nothing need to be provided for this claim as the company is suitably covered against any possible losses. Can I say, if suppose some amount is reimbursed by third party, which can be insurance company, it is a separate point, and for that reimbursement, if the inflow is virtually certain, we need to create a separate reimbursement asset. Means we need to create provision separately and we need to create a separate reimbursement asset separately. Understood? Means provision should not be netted off with the reimbursement asset. Correct? So it means the accountant in this regard is not correct. Let's see what MCQ has been given. Point number 3. FA Limited has an associate company, Flynet Limited. Following are the information of Flynet Limited for the year ended 31st March 2003. So they have given some information about their associate. What information is given? Let's see. Net income after taxes 120. Decrease in account receivable. So of course, when you say decrease in asset or increase in asset, of course you can understand it is information given for cash flow operation, means cash flow statement, and you might need to calculate some cash flow from operating activities. Correct now. Depreciation they have given, increase in inventory they have given, increase in account payable they given, decrease in wages payable given, tax charge for the year, and profit for sale of land. So from this information, of course, you can easily calculate cash flow from operation as per Ind AS 7. So third point is related with Ind AS 7. Now let us come to what? MCQs. On the basis of fact given above, choose the most appropriate answer to question number 1 to question 5 below based on the relevant Indian accounting standard. Which of the following item need to be capitalized in determining the cost of production line? So they have given from the following which are supposed to be capitalized. The abnormal loss, abnormal cost will not be capitalized. Point number 1 is wrong. Point number B, recoverable GST will not be capitalized. Initial estimate of cost of dismantling and removing the item and restoration site of 2 lakh. Of course, it will be capitalized, but not at future value. It will be capitalized at present value. So this is also not correct. Initial estimate cost of dismantling and removing the item and restoration site of rupees 1.36. This will be capitalized. So point number D is correct. So point number D is correct. You got 2 marks. Understood? Yes, sir. Let us come to point number 2. Calculate a company's associate Flynet cash flow operation. You need to calculate cash flow operation. Let us start. So can you see they have given profit after tax 120. In this you will add first what? Tax charge 15 you add. 15 you add. So this become profit before tax. So 120 plus 15. 135 is what? Profit before tax. Then what is given? Profit from sale of land. So 2 will be eliminated. So because it is a non-operating income, it will be eliminated to minus 2. And they have given depreciation. Depreciation, how much they have given? Depreciation they have given 25. 25 will be added. 25 will be added. So this become operating profit before working capital changes. Correct now. Operating profit before working capital changes. This type of question you have done in CA Inter also. Correct now. So nothing to explain in this. So 135 minus 2 plus 25, this become 158. Now you will do working capital changes. So they have given what? Decrease in account receivable. So you all know that decrease in asset will be added, increase in asset will be deducted. To which asset? Of course, operating asset and operating liability. Only will consider operating asset and operating liability. So decrease in account receivable they have given 20. So 20 will be added. Then they will increase in inventory 10. So 10 will be deducted. 10 will be deducted. Then they give an increase in account payable liability. So increase in account payable liability will be added. Increase will be added to will add 7. Then they will decrease in wages payable. So wages payable is also liability. So 5 will be deducted. I hope all the point has been done. Now find out plus minus. So 158 plus 20 minus 10 plus 7 minus 5. It is coming 170. Let's see 170 is an option or not. So 170 is an option. So point number B is correct. Point number B is correct. Got this point? Yes, sir. Can we come to point number 3? Come to point number 3. What accounting treatment should be done in FA Limited books for the year ended 31st March 2003 as the customer has taken a legal action against the company on the loss of profit that has arises as a result of the problem with the system. So of course we need to find out whether we should recognize provision or we should not recognize provision, or can we set up with the reimbursement asset or not. So in this question, of course, the reimbursement asset can be recognized only if the inflow is virtually certain. So nothing has been given about the virtual certainty of inflow. So let's see option what is given. Nothing need to be provided for the claim instituted by the customer. This is to 100% wrong. Correct. Provision of 1.6 lakhs to be recognized with the corresponding charge to PL. This is correct, but let's see point number C and point number D. There can be some better option than point number B. So be careful. Always read the entire option. Don't make any judgment by reading only option number A or option number B. Provision of 0.4 lakh as per the best possible outcome should be recognized with the corresponding charge to PL. This is also not correct. We cannot do set off and recognize the net amount. Correct? Yes, sir. Contingent liability would be disclosed in 31st March 2003 finance statement. This is also not correct. So point number B is only correct. The best option is point number B. Chalega? Yes, sir. Coming to point number 4. Compute the total amount to be charged to the statement of PL with respect to production line for the year ended 31st March 2003 and the balance of provision of dismantling costs carried to the balance sheet. Now, how much provision you have created? You have created a provision of 1.36. 1.36. Can you say as per Ind AS 37 we need to add interest every year? Correct now? Which is nothing but unwinding of provisional amount, you need to add interest. So interest will be added for how many months? From 31st May. From 31st May to 31st March means for 10 months. To 1.36 into 5%, 5% discounting rate into 10 by 12. 10 by 12. How much it is coming? 1.36 into 5% into 10 divided by 12. It is coming how much? It is coming, one second, 1.36 into 5% into 10 divided by 12. It is coming 0.056. So it is 0.057 कर सकते हैं, 57. तो how much it is coming? 1.36 plus 0.057. It is coming 14.17. 14. Sorry, my mistake. One second. 1.36 plus 0.057. It is coming 1.417. So which one is option? You can see they have asked provision. So provision is what? 1.3 is not correct. 1.70 is not correct. 1.42. 1.42 is correct. So of course point number C is only correct. This is also not correct. You can see means without calculating depreciation, without calculating, because they have asked compute the total amount to be charged to the statement of PL. They have asked 2 points. What will be the carrying amount of the provision? The carrying amount of provision already we calculated 1.42. So this is the better option. This is the best option. So even though you do not calculate this, you are getting the answer. You are getting the answer. This is smart work. But let us calculate the depreciation also. We'll calculate depreciation. But for that you want total cost price. So first let us calculate the total cost price. So total cost price already we have done. What should be added and what should not be added? So what is 10 plus 0.80, 10 plus 0.80 plus 0.60, this will be added, plus 0.50, this will be added, plus 1.36. So it becomes 13.26. So 13.26 is the cost price. Can you say out of these 3 lakh will be the current price of major overhauling expenditure which will be incurred after 4 years. So the current estimation of such expenditure is 3 lakh. So that will be depreciated in the first 4 years, and the balance is what? 10.26. This will be depreciated for the 8 year, for the entire economic life. So let us calculate to 3. What will be depreciation for this? So this will be 3 lakh into 1 by 4 into 10 by 12, because depreciation will commence from 31st May only. Correct. This is coming how much? 3 divided by 4 into 10 divided by 12. It is coming 0.625. 0.625 and 10.26. 10.26. Correct. This will be depreciated for 8 years. To divide by 8 into 10 divided by 12. It is coming how much? It is coming 1.06875. 1.06875. Total is how much? इसमें ऐड कर दो 0.625. It is coming 1.69375. 69375. Correct ना? This become depreciation and the finance cost कितना था? 1.69375 ना? तो finance cost already we calculated this. तो 1.69375 plus 0.057 इसको ऐड कर दो तो 0.057. It is coming how much? 1.75075. So approximately you can say 1.76 approximation. So point number C is the correct option. Understood? However, even though you do not calculate 1.76, you can easily calculate 1.42 and you can save your time. This is the smart work. Out of 2, I will say if you calculate a easier one, you can easily get the answer. Provided in other option there is no 1.42 lakhs. Chalega. Now compute the cost of production line. This is already we calculated. Cost of production line. Cost they have asked. If they ask carrying amount will be after depreciation. Correct? Be careful. The cost they have asked, it is 13.26. So 13.26 is the correct answer. Let's see what are the answer given. So first option, the option number D is correct. Option number B is correct. Correct. Then point number 3, option number B is correct. That only we have done. Then option number C for point number 4, and for point number 5, option number A is 13.26 is correct. I hope this you have understood. Correct. In the next video, we'll meet with case study number 2. So every video I'll make one by one case study so that it will help you. And whatever case study you want, that only you need to listen. Don't listen unnecessarily all the case study. If you think that this case study you have not done, you have a doubt about this case study, then only go in the video and just listen that case study for the clarification. Okay? Thank you very much for today. We'll meet in the next video with the next case study. Till then, bye bye. Take care. Happy studying, happy preparation. Bye bye. All the best.